Hi, this is Keith Shabby, your friend in the mortgage business, and today we're talking about VA credit score requirements. In addition to your ability to pay for your mortgage, VA will look at your ability to repay as indicated by your credit report. Your willingness will be judged by your credit report records, that is how well you've paid your loans and other debts in the past. If you are unsure what your credit report is like, you may want to begin by getting a lender's credit report that you can view immediately. To help you understand why credit is important and why VA will look at your credit, please try to understand the following. Perfect credit is what you're supposed to have. Whenever you borrow money, credit cards, auto loans, student loans, or etc., you are making a commitment to the creditor to pay them back on the terms mutually agreed upon. If you are late making a payment, then you have broken the commitment and the lender can indicate this on your credit report. The lender does not know why you're late, they just know that you've broken the commitment agreed upon. They are not responsible in helping you manage your bills and debt, as they simply make an offer and the borrower accepts the terms. This is why your credit is very important in qualifying for a home loan. Although you're supposed to have perfect credit, VA will allow for minor past credit issues as long as there is a reasonable reason why there was an issue. VA will also look at your last 2 years of your credit history. If there are some credit issues, we may be able to overcome them with sufficient explanations and supporting documentations of why the issues occurred. The following are some of the reasons VA will accept: loss of job, job transfer, or serious illness. As long as it seems to make sense and it's not just because you didn't want to make the payment or because you had too much other debt, you should not rule yourself out from qualifying for a VA loan to buy a home because of credit issues until you've allowed a mortgage consultant to review your credit. There are some credit issues that must allow for certain time to pass before you can qualify for a VA loan. These are also known as seasoning, and they are as follows: 2 years from the date of discharge for a bankruptcy and 3 years from the date of a foreclosure. Also, VA would typically require that any outstanding collection accounts, judgments, or charge-offs be paid off in full before closing on your loan, but not necessarily before approving your loan. If you have a federal tax lien that is in repayment agreement, you do not have to pay it off in full, but you must be able to qualify with the monthly payment of the repayment agreement. State tax liens typically must be paid in full prior to closing a VA loan. Another advantage of VA loans is that VA does not require a credit score item called a FICO score. So if you have no credit at all, you may still qualify for a VA loan. If you have credit, you will typically need a minimum credit score of at least a 620 to qualify for a VA loan. When you apply to get pre-approved for a VA loan, we will order a credit report for you. The credit report will show your record of payments on loans, charge cards, and other similar debts. If you have never had a loan or a charge card, you can show that you've had good credit or payment on your utility bills and rent payments. We will review your credit report with you. Should you have some credit issues that prohibit you from qualifying for a VA loan now, we will show you how to correct the issues so that we can help you qualify to purchase your home in the future. In today's world, lenders are looking for credit scores of 620 or better in order to qualify you for a VA mortgage. But the truth is, you can get a credit score lower than this with compensating factors. For credit scores below 620, please contact your mortgage consultant for future information. This is Keith Shabby, your friend in the mortgage business. Thanks again.